What's up, traders? Today's Saturday, February 4th. I had an opportunity to sleep on it last night and had a couple cigars today. And now I'm going to give you some jam-packed information in preparation for next week. I decided to do it today and not Sunday night, for example, because then that may not be enough time. I know some of you guys want to do your homework ahead of time. Okay, so last night, I showed this chart, the regression to the mean. Remember that? And I pointed out, well, we could go right back to midline, anywhere from 408 to 402. I'm going to get into a lot of details on that today. Okay? And why don't we go ahead and go to the next slide? Here are the scenarios. Now, there are key levels you must be aware of. Because as you guys know by now, especially those who follow me on Twitter, the market absolutely 100% respects these lines without exception, right? You guys know that. You've seen it yourself. Without exception, okay? So you've got to be aware of these lines. So therefore, you can anticipate the shenanigans the market makers are going to do. And the summary is, I fully expect, with 100% certainty, they are going to use futures to their advantage. Okay? They're going to use futures next week to position themselves each night, each night and each pre-market morning, in such a way that they can ultimately pump and dump, gap up, for example, and then lose that support. Okay, I fully expect them to do something like that. I just don't know exactly how they're going to do it, but here are the scenarios to watch out for. Okay, let me turn on my pointer so that's easier to. Okay, SPY 409, the old rising channel bottom. I even color coded it so it's easy. That's gray. Here's the gray line right there. Here's the gray line. 409. Okay, so scenario one. Consolidate under 409, but find support at 408, the blue channel line. Here's 409. Here's 408. Got it? Okay. You could definitely consolidate under there. Okay. So consolidate under there, potentially rip it up, or continue to fall. Okay. So that's the first scenario. Second scenario: consolidate under 409. Lose 408, but find support at 406. Main channel bottom. Here's 406. Got it? 409, 406. Okay. Now we're getting into some big time, big game type scenarios. Because as you know, you're talking about old channels. This is a major bottom. Okay, right? You guys know that. And this is a major bottom too. You could get some fierce movement in here, right? You can get some chop, big moves back up, and then it could take it down to 406. Everyone thinks it's going to go even lower, and then they just rip it back up, right? We're talking bear traps and bull traps in the same day. Okay, so that's what I'm saying. You have to be aware of these levels because now you know how they could play it. Okay, they could play in these ranges, and you can get some fierce movements or violent movements because you're talking about channel tops and channel bottoms and stuff like that. Okay, so now here's SPY 406. Let's say we could lose it. We managed to get down here. However way we did it, now it's at 406. Consolidate under 406. Find support at 404. Okay, 406, 404, the blue line, right? Chop around in here. You could mess around in here for a little bit, right? Okay, so and consolidate under 406. Find support at 400 to 402. Okay, see here now. Say you lost 406. Now you're getting down to 400 right here. This is that thick band of weekly EMAs and SPY futures EMA, and the 400, the blue line right there. That's the 2011 line. Set what 12 years ago. Okay, 12 years ago it was set. And then this is the one-day SMA 20. That's the gray line. So this is a thick thick band. Okay, I mean, I would expect some serious support there, right? Okay, that only makes sense. So, so that's that. Now, spot weekly 400. Let's say we lose it, or futures takes us underneath of it. Okay, they could do it. They did it this week. They took us this week. They took us under a thick band, only to rip it back up. Okay, so you've got to have situational awareness of this band. 400 is critical, 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 critical. I just don't know exactly how the market maker is going to play it. That's the problem. I don't know. But that's why we're talking about scenarios and what to look for. But the first thing you have to do is be aware that it's even there, that this is a critical zone. Critical zone. Critical zone. Okay? Now, of course, if you lose 400, there is some support at 398 right here. I mean, not some support. This is a half channel line, so that's important. So between 400 to 398 is also an area you could lose it, come down here, back test on it, chop, and then rip it the other way, right? The half channel line is important, as you saw this week. Actually, on Friday. It's on Friday. The half channel line, the one that I mistakenly drew as the blue line, later found out, no, that's actually a half channel line. Okay, so so there's that. So 398. Now, if you lose 398, there's not a lot of there's a lot of 1/8 and 1/4 channel lines, but to me, you could find support there. But the next major level of support, besides the 1-day EMA 50, currently at 395, the next major zone of support is 390, the hive. Okay, for you new viewers, the hive, this line, this channel line, goes to the October 13th wick low. Okay, for those of you who are new and don't know what the heck the hive is, this is it. This is SPY 390 is the last line of support. If you lose it, you're making new lows. That's it. That's just all there is to it. Okay. But if you were with us in January, you saw what happened every time we came down to the hive. Oh yeah, it got pretty vicious. I mean, I don't have the slide immediately available, but man, we just bounced on top of it. Every time we got close to it, boom, it just violent reaction back up. Okay, all right. So let's talk about these methods. Oh yes, these methods are critical. These methods can happen at any one of these levels, is what I'm saying. That's why I kind of put it down here and not within each one of these scenarios. Because here's where I don't know exactly how they're going to play this. I'm just pointing out what to look for, what to anticipate. Okay. Basically, they're going to do a pump. They're going to do a pump and dump. That's the only way that's going to forcibly lose these levels. Highly unlikely that we're just going to meander intraday. Let's just take 409, SPY 409, this gray old channel bottom. Highly unlikely that intraday, oh, we just kind of meander down here. Oh, we lost it. I don't think so. That's the least likely scenario. The more likely scenario is they're going to pump and dump, and they're going to really dump it. It is going to have to just go through the level. See what I mean? That's how they're going to do it. Now, here's another way that they can do it. They will use futures. They will manipulate futures to go beneath the level, right? Go beneath the level. Okay? So that they took it out of our hands. They go, oh, what? We already lost the level overnight. Sorry. And then they gap up. They gap up in the wee hours of the morning. They gap up above the level. They back up above the level, only to fill, and then pump and dump, and then fill the gap. Go back down and fill the gap, and then you lost the level again. See what I'm saying? Okay, that's one scenario. Now another one is futures meanders beneath the level, like, oh, let's just say futures goes down to 40. Oh heck, let's just choose 407. 407. Let's just call it that. 407. And in the morning, they pump and dump it right back up to 409, where you know it's going to get a fierce rejection now. See what I'm saying? So they start off at 407. Futures are down. They pump it, pump it, pump it. Boom! Get up to 409. Bam! Get fierce rejection. Only to then go down to 406. See what I'm saying? That's what I'm talking about. Oh, they're going to do something like that, 100%. I just don't know exactly the sequence, right? Okay. Then what they could do is the final scenario is market is down intraday, but then all of a sudden, oh look, futures is up tonight. Like, what? That doesn't make sense. You know what I mean? Oh, well, actually, it does to the market makers. So, for example, let's just say, yeah, we can go by that intraday scenario where, let me pick, yeah, 404. Let's say we get down to 404. We lost this line of support, so it was down. We closed down and right at 404, we found this 1/8 blue channel support for intraday, right? But then all of a sudden, kind of futures it goes up again. Like, oh, why is futures up? What's going on? Oh yeah, because they plan on at opening bell, they plan on pumping it, get smacked up to 406 again, and then you're gonna lose that. See what I mean? And then you're gonna go down to 402. You see what I mean? I just don't see the scenarios of we just kind of had a down day and we're just going meandering lower. Nah, that's too easy. It's too easy. Because when you do it that way, you're only taking money from the bulls. You know what I mean? You need to take money from the bears too. You need to fake them out thinking, "Oh, it's a reversal." See what I mean? Or it's a short squeeze, right? They could do something like that too. Oh, absolutely. They could squeeze in the morning and maybe even come up above 406 for in this example. Well, let's say we start at 404. Squeeze, come up above 406, knowing that we're not going to be able. They're not intending to successfully backtest 406, and then we're going to lose that. But in the meantime, you've trapped the bears because you squeezed. See what I mean? So these are the various combinations to watch for, to just mentally prepare yourself for what's coming next week, right? It's we're gonna get different variations of these trickeries, right? You just gotta, but at the end of the day, you've got to. You don't have to commit it to memory, but just keep this chart up, so you know where we are at the beginning before opening bell every day. You have to know where we are relative to a major line, okay? And I didn't even include in this discussion like the other important EMA lines, the 30-minute, the 65, the 1 hour, right? The 4 hour. I'll do that each day, right? But basically these are the higher level targets that they're aiming for. And I'm not talking about an intraday level. I'm talking about, well, where are you trying to take this thing to get rejected at? See what I'm saying? So the smaller time frames like the 1 hour EMA, the 4 hour EMA, that's more for intraday pivot points, as as a means to just chop or eat time off the clock. You know what I mean? Like, it's kind of grinding, this and that. Oh, I'm gonna wedge in between this and that, right? I'm gonna wedge in between the 1 hour and the 30-minute. That's just those smaller time frames. EMAs and SMAs are just more for the market makers to create intraday pivot points to eat time off the clock, to burn premiums too. See what I mean? So, yeah. Okay. So this next slide is basically what you just saw, but without all the notes and all. In case you want to kind of look to the left and see other data points from previous days, so you get a more complete picture. Okay. So I hope this helps. You know, you guys, I know some of you are doing your homework, but I'm more doing game day strategies here, right? Like I can see how you could play this, you know, according to these key levels. Yes, absolutely. Because as you see here, look, I mean, look how it just time and time again. Here you go. Went under the band, boop, ripped it up. See what I mean? Right? So, and look at this. Look at this. Just following this channel bottom. Well, here's the channel top. Here's the channel bottom. Just following it, following it, following it, following it, following it. See what I mean? It's like, yeah, they're gonna use these lines. Like look at this. Here's the half channel, right? Oh, you're kind of messing around, following it, all following it. Lost it, went to the blue channel, found support there, ripped it back up. See, back down to the blue channel, kind of bouncing on top of it. But because remember, I've told you guys in previous episodes, anytime you're bouncing on top of an important line, guess what happens? Oh no, you go down. Bouncing on top of a line is bearish. Consolidating beneath the line is bullish. Right? Here's consolidation beneath. That's bullish. What happens? Boom. Okay? So, you've got to get these lines mapped out. That is critical to anticipating, not necessarily predicting, anticipating what they are going, not what they're going to do, what they could do, what options are available to the market maker that at their disposal. Okay, basically these lines are the guardrails. The market makers are following these lines as guardrails. Okay, so basically at the end of the day, if they are following these lines, then it behooves you guys to do the same, doesn't it? Okay, so that's basically all I've got for you guys today. Please feel free to follow me on Twitter, leaving real-time tweets out there intraday. I plan on doing that Monday for sure, guaranteed. And of course, listen to your favorite music while you're trading. Helps you get in the right state of mind. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 000 signing off.